Good day, everybody. Welcome to the Deal Scout. On today's show, we're going to have a conversation about cannabis and the money behind it. Rob, welcome to the show.
Thanks, Josh. Happy to be here. Talk a little bit about cannabis.
Sounds good. So let me ask you a question. When you go somewhere and you go to a party and we go out somewhere together and I go, "Hey, this is my buddy Rob," and you introduce yourself. What do you tell when people go, "What do you do?"
Real estate finance.
Okay, I got it. All right, but let's unpack that.
Fundraisers at my son's school.
Right. What does your son say you do?
Daddy grows money.
That's right. And some people light your stock on fire. All right. So with this, let's go into details about who Rob is and what he does. All right. So kind of give us an idea.
Sure. So I'm the president of Pelorus Equity Group. We're a value-add asset-based lender. We've been doing it for more than 30 years in the business. And we launched Pelorus in 2010. And we've done more than $1 billion of value-add transactions, more than 5,000 transactions. And our local congressman was Dana Rohrabacher at the time. He passed the most consequential amendment to reform what the relationship between states and feds on cannabis, and that was the Rohrabacher-Blumenauer Amendment. And that amendment defunded the Department of Justice from any prosecution of a cannabis-related business in a medically licensed state. So Congress had used the power of the purse to take away the power of the executive branch to prosecute anybody. Nobody seems to know this. This is the most consequential law or amendment ever. It was a standalone amendment since 2014. It passed with overwhelming bipartisan support every single year since it passed the first time, and it's now in the omnibus spending bill. So when that happened, we realized this is the largest asset class in the country that just got newly created. And today we built a database. We actually know the size of that. It's $50 billion asset class. And so there's been about $2.5 billion lent out on it. And we've done about $250 million of that.
Wow. All right. So give me an idea of product ranges that you guys
So we're just a lender. And just to take a step back. So we pivoted to the space in 2016, and we became the first dedicated exclusive lender to cannabis lending. And we set out to build all the facilities, because even if it existed, it needed improvements to qualify as a cannabis use property. So generally tenant improvements. So we were the first dedicated lender in 2016. Then we launched the first dedicated fund to that sector. And then we converted to a private mortgage REIT for that fund, which is not a traditional REIT. It just gets the tax advantages. And then some of the big news that we just announced last week was we were the first privately held company in the cannabis sector to get rated by Egan-Jones as investment grade. And we brought in some of the largest institutional investors in the country. And we did the first unsecured bond offering for our fund. So we're setting the first on every single one of these things going through the line. We turned down going public. We believe our strategy is to remaining private is the best way to go, especially for this particular asset class. So our product is dollars. We just are the lender. We don't own the properties. That's not our business model. We're just providing the high performance loans to build them out. And then with the bond offering, we did that so we could provide a fully stabilized, amortized product for our borrowers that had completed the properties instead of giving those transactions away to our competitors. So now we're just rolling out that product. And so those are the two loan products that we do. And then on the investment side, we just have one fund that investors come in.
Okay. So why did you choose this space?
Well, we were looking for something that we wanted to do since 2010. The fund offering was created in 2010. We were going to the fund originally, just to take a step back, we foresee that all these crowd source funding hard money companies, they don't own any of the security directly. And if there's ever a transaction that goes bad, there's no way to do a capital call for that particular property. There's no borrower that can be put in place. And so we recognized that a long time ago, and we had put our fund in place to actually provide the capital to those free and clear properties that these crowdsourced funds would own, but they don't own them directly. And so we figured a way through, but the market has been so frothy for so long that we pivoted another direction in 2016. So, when we were looking what we wanted to do, that was originally where we were headed, but we didn't think that was we thought that that opportunity didn't come to fruition at the time that we thought. And plus Dana passed that law. And so for us, we have families and friends that have all had the benefits of medical cannabis help them, sleeping, end of life as opposed to opiates and things like that. And we thought that there's nobody better suited to help bring the best in class value add lending to this sector than us. And we thought, let's roll. But by the time other people figure it out, we will be so far ahead, they'll never catch us. And we've thought since 2016, when we originated our first transaction, that there would be somebody substantial the next month or the next year. And that was 5.5 years ago. So we still haven't seen it. We've seen one other player emerge that's publicly traded, but they've only been in the business for a year. They launched earlier this year. They certainly don't have 5.5 years of transactional experience, and they're somebody real, but we're private and we're going head to head with them.
So in the cannabis industry, one of the things that we saw was an early issue with some of the investment groups that I was working on is, insurance and even mortgages and those kind of opportunities. So people are like, yeah, I want to get involved, but I can't. Like, how did you guys approach that? Or was that a benefit to you?
So even once you've identified that you feel comfortable underwriting and lending on it, and once you have identified your source of capital, the process to close that is with third parties and title insurance, property insurance, custody, errors and omissions insurance, your fund offering documents that all say the manager will not break state, local, or federal law. So how do you get through all that? Well, you have to think about it in advance, and you have to solve for those things. And so today there's about 100 private lenders, and even the ones that have closed transactions still continue to fail on closing transactions because they just can't foresee all the elements that come in line that they forget about and are not able to solve quick enough. We've solved those to such an extent that institutional investors, banks, major fund managers that you would recognize the names of, some of them start with the letter B, are people that we've talked to and done underwriting and figured out that what we've done is a clear path through. Now, we only lend to the owners of real estate, and then the owners of the real estate have a license, leases with the tenants. But even still, you still have to disclose these things, and just the disclosure, it becomes where your problem is. And so not all these things can we solve day one. We had to self-insure on errors and omissions insurance for 4 years. And that's just part of what you got to do. But today we've got all that solved, including institutional warehouse line of credit, which we were the first in the country to get that, and FDIC insured bank, we were the first for that. So we're happy to talk about banking and how that relates, and the misnomers there, and institutional lending. So all these things exist, and people just don't know it.
All right. So let's do some role play, right? So I'm an investor. Let's start with family office. All right. Family office comes to you. What's their primary question? They're like, okay, we're going to invest in your fund. We want to, participate in these kind of deals. What is the, family office or private equity? What questions are they asking you, or what concerns do they have?
Yeah. So usually they don't know what to ask because they have no experience in the sector. And so the only experience they have to revert back to is their traditional real estate fund questions. And so what they try to do is comport what they don't know into tasking you questions, and they're completely misaligned. And so this is a specialty use asset class, very similar to cold storage, data labs, or pharmaceutical labs, something like that. And when you move into specialty asset classes that are very unique properties, you have to not make it such a broad questions that you're asking. What's your concentration limit? What's your alternative use? And all these different things. And those are important, and we have the answers for those. But when we first started talking to what we would call institutional size check writers, more than $1 million, a family office, a pension fund, whatever it would be, because I wasn't able to be the one to present and answer the questions dynamically at that credit committee, none of those went through. So we didn't get any institutional size check writers, investors until this last year. And we had to really shift our strategy Even our own existing investors wouldn't come in because they were trying to tell us how to do the deal and they'd never done one. And we're like, yeah, we wouldn't do it that way. Good luck. Maybe you could do it that way, but we're not going to do it. And so what we ultimately learned and figured out in the long run is we got to raise every single one of these dollars ourselves, start with brand new investors. And we targeted cannabis equity investors. If they already had made an investment as an individual into cannabis equity, everybody's done real estate. And so now they already have an understanding. And so that was the pivot. And so we aggregated, almost $250 million through individuals, accredited investors, and built that platform with no institutions. Today those are starting to flow in, and everything kind of changes in what's acceptable morality, because you might get it approved, but the board won't approve it. And there's morality things and other kinds of issues like that.
Right. So on the morality side, I know, in a deals are, I would say business is personal, right? Like people will pull out of a deal because it doesn't feel right, because they have misnomers about, an idea of something, or they just have they don't want to be seen with this kind of product. Have you experienced that with your investors?
So for us, that's not been the case. If we were syndicating a transaction and we were doing a standalone transaction, that's something we have to clear right ahead, because the person making the investment decision may be like, yeah, no problem. But we're like, have you cleared this with the source of capital, the bank that's wiring to? Have you done it all the way, string it end to end here? And that's why we always say we only would work with people that have already done cannabis investments, because they've already cleared that path through. And it's not that it's a difficult path to do, but you need to verify that most of the people that are aggregating money are actually not the people that had the money. And so you have to go all the way to the source of where that money is coming. Is it coming from a foundation, and are they opposed to cannabis? And so you got to think all this stuff through to the nth degree, which you normally wouldn't have those problems to do.
Right. If it's technology, if it's a bottle or whatever, or a product like that, no big deal. But because it's that, some people have some questions or concerns.
Yeah.
Now,
just so you know, everybody is leaning into it. Where you run into issue is the political backlash of what it generally is not a big enough investment to take the potential exposure that could come from it. So just why bother? That's the main thing. And also, almost all of these guys go to their attorneys that have no clue about cannabis whatsoever and say, is this something we can do? And there's no power in saying yes. They don't. If they say no, they're protecting themselves. Right. It should be tell me the least risky way to do this.
Yeah. And if you go to an attorney and you go, can I do this? They're always going to kill the deal unless they're a deal making attorney, right?
Especially if you're looking for outsized returns on something that's on the fringes. But if you go to the Dana Rohrabacher Blumenauer amendment, there's no way and that's not even to prosecute, that's to prosecute a cannabis related business, which is our tenant, not even our borrower.
Yeah.
And even if that happened, that could happen with any illegal business. Doesn't have to be cannabis. They could be doing crack in your building and you didn't know. They could still, the Department of Justice can still go after that owner of that property and seize the assets. But you have to remember, when you seize something, you still have a constitutional right to your debt. They don't just get to take everything. They get the net equity. And so we have to remind attorneys and people that these things that you're stipulating that are possibilities are actually not possibility. If you would have researched it, you would have known.
Yeah. Now, how did you get even into the space at all? Right? Let's rewind. How did you even get in this game?
Well, my business partner, my best friend from high school, we were going to launch two funds, one cannabis and one non-cannabis. And, he was, and we recognized that it was an opportunity, more so him, he was more researching it. And so I was going to do the cannabis or the non-cannabis, he was going to do the cannabis. And I was thinking from a process point, not product point, but how do we have two funds competing against each other? It just doesn't make sense. So we had to pick a lane. And so he still reminds me of that day that, that good thing you brought me along here.
There you go. Now, looking at your LinkedIn, you were in the water sports industry for a little bit. So you went from water sports to capital. How does that happen?
Great question. I'm super happy you asked me. So I've always I come from a family of entrepreneurs. I did a lot of business plans and capital raising, even in college. And then I went and worked for an orthopedic company for sales. But while I was doing sales, I was looking for what do I want to do? And I had to have a passion for it, had to be legal, and have an exit strategy. Three pretty simple things.
Yeah.
Well, I launched an action sports company, a wakeboard company, got it to 0 to 2.4 million in annual sales, about 20 to 30 employees at any one time. And I realized that it was so much work to generate 2.4 million in gross sales with 10% or 240,000 in gross profit, not even net profit. And that's only if I collected the 1.6 million in receivables I had. I'm like, I'm doing so, and I sold the company. I'm doing so much work to do other, but it's fun. I have a passion for it, and there's a potential big exit here. When I sold the company, I realized there was one more element I need to have in my formula. It has to have a bigger price point for each product and a shorter sales cycle. So real estate finance. And so I did international finance and big projects. And so I just took, everything that I learned over the years and just put it into, finance, big debt transactions. And then my buddy from high school called me and said, "Hey, let's do this." And we started working together, and then we formed Pelorus in 2010.
So super interesting. Has anybody helped connect the dots between you were in orthopedic sales over here and having a wakeboard company over here? Did you share clientele there?
No.
There's a lot of knee injuries from wakeboarding, right?
No, actually, no. That didn't happen.
Okay, got it. All right, let's skip that question. Let's go on to the next one. So you got into commercial real estate, international deals. What did you learn there that you really didn't know when you're building the water sports company? Because you said something that you needed to add: higher dollar value, quicker sales process.
Yeah. So, the product, which a wakeboard is, $350 or doing $100 million transaction, either one is one product. So it actually took a lot more work to do to sell $2.4 million of $350 boards than one transaction that, I actually put together 3 transactions for $100 million. But those, you just you take what you learn in business and life and you say, okay, I just went through that. Where am I going to go? Because I got to create my own path. And what am I going to do? And real estate's fairly simple to understand. So I'm going to apply these things. If I'm going to do the biggest ticket items, let's do that. And so the things that I learned, though, is that you want to be in control of those elements as much as possible. So when you're syndicating a transaction, if it's not your money, you're not in control. And so that's difficult. So ultimately, for our company, how we've changed that is we're in control because we have our own fund. And so we manage that fund, and that's a critical part that we've learned over many, many years of how to be successful. Is when you have people telling you how to run the business that have no clue of what you're doing, that's not a good strategy.
Yeah. All right. You and I go back in time. You just had your exit, check in hand, right? It's dot matrix check back in 1999, right? So you got your check, and you and I get to go back and talk with the younger Rob. What are we going to tell the younger Rob to do differently?
What would we tell? So it was such a different time back then. I would say one of the things that I probably should have done that I didn't is that back then, when you're trying to raise capital, there was no places, there was no internet, there was no forums, there was no nothing. It literally was friends and family, and the most clunky way to go through that process. And even to get them the information was difficult. There was internet back then, but not to the extent that it was today. People didn't have it on the other side. So there was an investor, and this guy we actually still know today, that was offering me money for half the company. And I turned that down because I didn't want to give up control of the company. And I think that maybe that was the right decision, but maybe not. You know, you don't know, because I decided to not go down that direction. But sometimes I'm like, you know, if I could have cut that deal where I maintained control of the company, I probably should have done it, because it stifled sales for 3 years. And, you know, that was one thing. I think I made the right decisions. I didn't know at the time, because it's hindsight, but I think I did now that or at least I could justify them, what the decisions I made at the time. But they were, what I can tell you is that I made my decisions on principle and not on the dollar, because the principle is a very easy thing to define. If you don't have to look at, can I justify this more or less because of the dollars I'm receiving? So that, I think that's been a core element that we've stuck with all of my whole life, and with my partner as well.
Got it. So when you're doing deals, right? You and your partner are doing some deals, and he goes, does he ever remind you, hey, I'm the guy who got you in this? Like, does he ever like?
He doesn't have to.
Got it. What would happen if you didn't choose this? What would happen if he didn't bring the idea to the table on that?
We would have done something else in the non-cannabis. We would be doing the same thing, just not in this specific niche.
Okay. Now, with this, give us an idea of dollar value. You mentioned it in the beginning, but give me an idea again of dollar value and things that you've done through your fund and through the group.
Yeah, so our fund, it will be about $250 million assets under management by the end of this year. You know, the only other company that's in the space that's this size and can do these size of deals is a publicly traded company, and they got a market cap of about 350 million, but actual assets under management were about the same, and we'll probably pass them up this month. But I don't know what they're closing, but I know what we're closing. So that's one, you know, one competitor out there. It's just such a different space. What I can share about cannabis lending, what we didn't know is, first of all, it's the most outsized return of any investment. Almost all of these properties, or the vast majority, are free and clear because there was no lender available. And that's always the least amount of risk, is if you're not paying somebody off or having to pay a seller, and we only provide money for the build out. We don't give cash out. So it was significantly less risk, which we didn't know that. Plus, these borrowers were very sophisticated and totally bankable, and we didn't know that. And so that was amazing to learn that. And the other part that we didn't know is that it's just a really fun business, because we were the first doing it, and we've been able to get equity kickers from the cannabis use tenants, which that's just insane. We have our investors have options in equity in publicly traded transactions as part of their debt deal, and they didn't have to pay for it. They have no downside whatsoever. It's just what we call a kicker. And that might be more than the whole fund itself at some point. I mean, I don't think to that proportion, but it'll be sizable.
Yeah, I love those kind of deals. I love, you know, get paid on a little bit, and then equity options and kickers, and those are fun. Now, you were approached about going public, and you turned it down. How were you approached, and why did you turn it down?
So we get approached by all the people. We knew one of our peers was going public. We knew that there was a path through to do it on the NASDAQ, but we believe that for this particular asset class, which is technically in a sin businesses, gambling, cigarettes, alcohol, that this is going to do better in a real estate downturn or economic down cycle. And so generally in those periods, you have market volatility. And if we're plowing through like we did in COVID, completely unimpacted, but yet you've got the volatility of the stock market, you're not going to be able to raise capital through your traditional means of selling shares of stock or it would dilute your value so much that you'd basically kill your share price, and you might have other issues with bonds or something, or your leverage lines or whatever. So we believe that it's better to have individual, to stay private, have no volatility there, and we can have no issue. We can be thinking about not next quarter, we can be thinking about 10 years down the line, and you don't have that luxury with the publicly traded company. They may say they do, but really you got to keep looking, what am I going to do to keep performance going? You're only as good as your last quarter.
Yeah, no, I didn't think of the in certain industries, when there's a downturn in the marketplace, they actually perform better. But if you're tied to the stock market and there's a downturn, that might affect you negatively. when your normal business would actually improve. That's interesting. I never thought of the correlation of that.
That's
Super
that's
interesting.
for us in this particular asset class. The strength of it is that you're going to do better in those, and even COVID was the ultimate test, and we weren't even fazed by it. So that, why would we want to subject ourselves to that if we can continue on an asset class that's going to be unimpaired, that's going to continue to cash flow during those cycles? What if we couldn't raise any money because we went public?
Yeah. So great thoughts that I didn't even consider right before, preparing for this conversation and such. Great conversation. So let me ask you a question. Now, being in this industry, you probably get asked a lot of questions, over and over and over, and maybe some dumb questions. Let's just get some of those out on the table. What are some dumb questions you get?
Do you guys accept cash? No, we never have accepted cash for any of our loans. We're not starting today. In fact, we're actually banking an FDIC insured bank. And just a further note on that, there's about 694 FDIC insured banks across the company that bank cannabis depositors. We've never seen a transaction with a cannabis use tenant that didn't have banking in place. So there's a big misnomer there.
Yeah.
A lot of people think, this isn't necessarily a question we get asked, but it's it's kind of something we have to be aware of. A lot of people think that the people running the cannabis businesses are stoners like Spicoli. And this couldn't be further from the truth.
Yeah.
Most of them are ultra sophisticated business entrepreneurs that have typically teamed up with an ex-real estate developer for the capital side and the build out side. And then they've teamed up with somebody that might have been in the gray market area, has the experience, but didn't have the capital. And so those relationships were born over the last decade.
Yeah. So it wasn't Cheech and Chong taking your money and
we have not yet to see a Cheech and Chong. I think the only Cheech and Chong guy that I know in this sector is Be Real. And he's the singer from, I can't think of the name of the band, but he's pretty fun. He's a big weed smoker for sure.
Yeah. So, I mean, when do you think, what is the major hurdle? What's that?
Cypress Hill.
Oh yeah. I love Cypress. Sawed Off Shotgun song back in the day.
Sorry for interrupting.
Yeah, no, good. I'm glad you brought that up. I was a big fan of them. All right. So as a hurdle, what's the major hurdle you have to jump over, or people have to jump over to consider investing in the cannabis field?
So the one for us to jump over is just lack of false perceptions. And so most of those false perceptions are happening before we ever have a chance to confront them. So if I get the chance to talk to you, I actually all know, after talking with thousands and thousands, 4,000 investors in our database, 4,000 people I've communicated with. After speaking with that many people, I know the questions they're going to ask. So we answer all those questions before they ever have a chance to ask it. That's the perfect universe. And I know the responses to the things that they might ask, usually the ones that get, so we've got that all identified. But the problem is that you never get the opportunity to speak to somebody that, out of there's 4,000, only 800 and something became investors. So a lot of those people, I may not have ever had the opportunity to actually speak with them. They might have just been an initial contact that we identified. So that's on that side. For investors, once they're coming in, we realized if we were dealing with individuals that were making decisions for themselves, we could aggregate that capital and close that deal typically in 24 hours, maybe 48 hours.
Nice.
If we've got our process in place, we are giving the information for them to process it at their own speed, and really good information. We made massive investments in that, so that by the time they contact us, they're ready to invest. It's usually 24 hours. I mean, literally. But for the institutional size check writers, it's a 3-year horizon. and that's, and it's just there's so many people, and it's not worth the extra yield to the institutional size check writer to potentially get something wrong and lose their job. Yeah. And so that is a much more difficult, because individuals have something to personally gain. A guy on the credit committee doesn't get a bonus because he approved this. Yeah. And so what happens is you've got a disconnect of who and what, how this affects, and if it's going to make this guy, the credit committee only has something to lose if it doesn't work out. The yield gain, well, yeah, their clients are not going to know that they passed on the, like if he's taking all these investments to their committee, if they didn't bring ours to committee, the committee's never going to know. It's like, so he'll find something to replace it. So that you have to think about that stuff. You have to make these people realize. And so you have to figure out, how do you get to those guys to explain to them to get rid of their preconceived notions? And so we figured that out. So all that stuff we had to go to the conferences for the due diligence guys to get to those guys, because that's the guys that underwrite it before it goes to credit committee.
Yeah. Yeah. So interesting. So being in this industry, you've seen it start when, like around 2010 is when you started to see it bubble, right? To where it is now. There was a little bit of a wild west, right? What have you seen change and improve? Give me an example of early crazy, now normal.
So like in 2010, we weren't even there. It wasn't really even on our radar. Only in 2014 did it start to be on our radar, and just on my partner's radar on the outside perimeter. But each of those years was like a dog year times 10. The amount of change in public perception, and which is the most important part. And also what's really weird is cannabis is grouped with crypto. And so for whatever reason, as an alternative asset, and any conference and any talk, those two are combined. And so we're always the like most attended of an alternative asset conference, like the cannabis, even though the guys they know they can't go into it yet. They're all there trying to understand what's happening in the space. How do these guys do it? And so that's interesting that's changing. So today, those same conferences that we're going to, now I'm walking out of there and a family office will say, I was looking for a way to get in. We've already made some investments in cannabis, owning buildings and leased them to prop, so they were direct. And so now there's the universe of people having experience and exposure to it just keeps getting bigger and bigger and bigger, and it's getting easier and easier for us.
Where do you think the future? Let's you and I, we went in the past, talked to the younger Rob, right? Let's go in the future and talk with the older Rob. 10 years from now, where do you think the industry is going to be? So
I think that in 10 years, cannabis will be, as opposed to this year, 30 billion, it'll probably be in 10 years, 100 billion a year. It'll be, what's really interesting is you're seeing alcohol, tobacco lose market share because those are so unhealthy. And there's some alternative form factors that are not smoking for cannabis that are becoming extremely popular. Edibles and drinks with 10 when you have beverages that match the sessionability of an alcohol beverage with an onset of 5 minutes and lasting a half an hour, so that you can be sitting with your peers, them drinking beers and you drinking cannabis infused beverage, that the sessionability is equivalent. And that's one of the most important things, to be able to have a session of community with your peers, whether you know them or not, in a bar. If one guy's out of his freaking mind, he's not going to feel comfortable hanging out with these guys. Or if it's going to take him 45 minutes to feel something and it lasts 5 hours, that's a problem. So all these things had to be thought through: the sessionability, the onset, the offset, to match up what the standard is of beer or alcohol. And so all those things are starting to happen. And as those start to happen, the cigarettes and alcohol companies are losing their mind. They already were losing market share to healthy waters and non-alcoholic beers and things like that. But now they're panicking and they're trying to figure out which way do we go. I think that ultimately people in 10 years or 50 years, alcohol and cigarettes is going to be so de minimis compared to THC infused form factors.
Yeah. Now,
Good thought there, buddy. Maybe there's some shrooms in there. I don't know.
Well, what I was trying to do is go, I have a friend, right? Like, all right. So in the past, there's so many things I don't want to say right now. And then just going, how do I say this that checks all my insurance boxes?
A friend's asking.
A friend's asking, right? Right. I'm asking for a friend in terms of the acceptability of the cannabis industry. It's getting more and more acceptable, right? Medical use and such. Like, you painted a picture where one day we might be able to sit at a bar and you have Jack Daniels over here and, you know, pink fuzz over here, right? Whatever it may be. And, you know, like, and having a conversation in the middle. It's like, do you think that will ever happen where this is a over the counter?
That has happened. So there are cannabis, I forget what you call it, places in LA that have already been approved. There's places that you can go and use and drink cannabis at the bar at a social setting. Yes.
Very cool. So I've seen or heard, you know, the similarities. Anytime I've ever experienced it, I don't go crazy, right? It actually, you know, chilled me out. You know, me drinking, you know, a couple shots of Jack versus me having a gummy bear or something like that, like, big difference and a big, you know, response on the in the way I act. I think that this is a great move for the industry. I think that it's really healthy. So I took us far off path there, but I just thought that it was important to talk about.
I just think it's important. We're not telling people to go do this instead of that, but I think it's important to have an alternative for people to choose. And so what's happening is that new generations growing up are never going to know that weed was illegal. They're never going to have that stigma. They're going to have these form factors from day one. And so they're growing up in a different environment. And eventually we're actually have studies on this cannabinoid system and stuff, which there's none. I mean, there's very few. The University of Mississippi is the one place that they can study it. And so eventually we're going to have studies and how these different things, whether it's mind altering or not, the fact you can still utilize the cannabinoid system. You know, you don't need to, you can take out the mind altering effect, the recreational purpose, and still get the other benefits to help you sleep and pain and things like that. So it would certainly be nice if we're this country of science to have some science.
Yeah. So let me ask you a personal question. You have movie, TV show, book. What is your favorite that describes like the industry?
As a form of telling the story, or I've lost how the question is being asked.
Yeah. All right. So a movie, TV show, maybe a book. Is there anything out there that shows what the real world applications of what the industry looks like? Or is it all just crazy Hollywood and everything is absolutely nuts?
Well, I would say that there's different levels of the business. You have the brands that are producing cannabis. They might not even be producing it themselves or buying it. They've got a brand. Those guys are doing amazingly well. And I'm a car guy and I do a lot of driving events, and like, we don't know really what everybody does, but apparently everybody has freaking a weed company. And I didn't know that. But you know, so that is kind of like the more out there place, and the dispensaries do really well. But when you get into the production, the cultivation, the distribution, the testing, it's a different, you know, it's the brands. You need a creative person. You need a guy that's thinking, and it's an entrepreneur. I would say most of the entrepreneurs have created a lot of these brands. Maybe a lot of them, you don't need a college degree, and to have the experience, to the know-how is generally going to be a universe of people that were already out there in that sector and didn't need to have the Harvard degree. So from the brand perspective, but teaming those guys with the experience up with business people has been the holy grail of the MSOs and multi-state operators, and trying to get that right mix, because unfortunately, some people that came from the illegal industry, as they moved into the gray area and ultimately the legal area, sometimes they bring their ideologies of principles that they had prior and try to operate that way. And it's not a sustainable way to move forward with business partners. You have to be everything up front. And typical business partners, that everything should be up above board. There's no side deals. In cannabis, like, one of the things that we have to look at is any entity that's our borrower, we have to start with a clean entity, because we have no clue what they've tried to do with this entity, and side deals that they've cut with sharing. Somebody that's an investor already sold his shares to somebody else that didn't disclose it. And like, we're like, we can't, we're not taking anybody's word for it. We're a brand new entity.
So okay, so in your process, right? In your process, we're looking, I'm looking to stand up a medical facility, cannabis facility. What would I need to go through for your process in order to get funded?
So the process starts by emailing us the high level gist of it. We don't have any guidelines. We don't send anything out, and we don't talk to anybody. We see over 500 deals a year, and it's not a good use of our time. We wouldn't be able to close the transactions. We're just talking to people about what we might or might not be able to do, because every single transaction is a case-by-case scenario for this type of license in this particular area with this type of sponsor and in this particular situation. So what we do is we make them send us just a high level overview. We have to analyze that transaction to see if we've ever seen it. It may not have come from him but it might have come from the previous guy that put an offer on that. So we have the largest database in the world in the country for these types of properties. We built our own proprietary database. We know where all the cannabis operators are for each type of license, which properties they're in, who owns the properties, who are the lenders, and we track all that so we can be making factual decisions when we're underwriting transactions. So that information is super, super important in making your decisions.
Got it. So, and then your terms of how much is a typical deal that you put together, and what kind of time frame does it usually take?
So our deals are typically value add transactions up until this point, until we just rolled out this other product. And so the underwriting is significantly more robust, because there's a whole nother level than just the appraisal, the value, the payoff, and the underwriting of the borrower and the sponsor. You also have the construction budget, the contractor, the permits, the water, all that stuff. So we can typically get a transaction from when we receive an entire completed package, which is a whole nother thing too, because those elements may not be completed and they're still trying to figure out what they need. Typically, I'd say 30 days is comfortable. We can move faster. It's the third parties that can't keep up with this. Title insurance has been the largest log jam for us out there. But that for just a refinance of our fully stabilized stuff, if it's our own transaction, it's like one day. I mean, we already have everything. It's just, we're just rewriting the note. So it just depends on what it is.
So someone's listening in and they go, man, I got the perfect deal for you. All right. What does paint the picture? What's the perfect deal look like for Rob?
Yeah, so we wouldn't talk to somebody unless the cannabis use business was an extremely experienced operator, number one. So it has to be somebody with a proven track record that's already crushing it, that we've eliminated that potentiality of the tenant failing. Mm-hmm. Then the real estate, it has to be secured by real estate. We don't do any corporate loans or personal loans or anything like that. And the other thing that is extremely important is we need a personal guarantor, a sponsor that has the net worth, cash flow, and credit to support these transactions. And, some of these transactions are tens of millions of dollars. So you need to have a guy or a group of people that can support the cash flow, because remember, these facilities are not operating yet. So we need to make sure that if this transaction doesn't get fully stabilized in that much time, that these guys can continue to support that on their own with no income. And that's a really important factor.
What questions do you wish someone would ask you?
I've never had that one. I've had a lot of, what question do I wish they would ask me? Gosh, I usually have a good answer for almost every question. I can't even think. I guess, I do a lot of driving on the racetrack, and people might say, and people that know me or follow us might say, what do you take from that and apply it to your business? Is there anything there? And I would say that there's a lot, because what most people don't realize on the racetrack, everybody thinks it's all about speed and it's so high risk, but in reality, you have to be ultra disciplined, and you have to know the data on each of those turns. And the only way that you can improve is to be consistent and safe. And you consistently look at the data to improve your performance. And then you start laying in competition, and you let other competitors go off the line and try to do things and look for them to make a mistake. But you just continue to use steady consistency, discipline, and facts And that's what we do.
Right on. Now, my business partner is a professional race car driver, right? And he says if I ever meet someone who rides a track, I think he says, do you drive and brake with both feet?
So anybody that is really, really, really good has to drive and brake with both feet, because you can't transfer between the pedals fast enough to stay consistent with everybody else.
Yeah.
So I don't do that, but I'm not racing. So
okay.
yeah.
So you're going for track time.
Yeah, I'm a track driving enthusiast. I'm not racing wheel to wheel. That's a lot. There's a level of risk there that is uncontrollable, because you have egos, and you start going offline to pass somebody and nudge them with your car, or pretend you're about to nudge them, and it starts just that one extra inch you're willing to go, but that's a lot risking there to do that. That's probably not a good idea for a fund manager to be doing that.
Right. All right. So you get to have a race car passenger with you. You could have anybody. You're doing track time, and you could have anybody sit next to you while you drive. Who do you want sitting next to you? Anybody in history?
I don't even know. We know Lewis Hamilton does some drives with us, and some of the things that we've done. Super cool guy. I don't even know, because I don't want to be judged by him.
It doesn't have to be a race car driver. You get to spend X amount of time with someone sitting in your passenger seat. Who is it?
I don't know who that would be, because it's first of all, it's impossible to talk while you're driving. You're so hyper focused on exactly what you're doing that unless you're cruising, that's different. So it would be enormous. So it would only be what I would call just to show if they're riding with me. But I don't know who that would be. And each person from different types of driving applies different methodologies. A Formula One driver is doing something different than a GT3 driver. So I wish I had a better answer for you.
All right, you think about it. You come back with a better answer later on. All right. So last question. So as people are listening, and they got the operator, right? The super experienced operator. They got secured by real estate, and they have a sponsor that could personal guarantee. How should so the perfect deals on the platter coming over your way, how do they connect with you and do a deal with you?
Yeah, so they would start the process by emailing that high-level transaction, purchase or refinance. Here's the property address. Here's the brand. We're looking to build this out. Just a high level. We need to know the real estate. And if you don't have the real estate identified, don't talk to us. It's just theoretics at that point. Email at info at pelorusequitygroup.com. And Pelorus is spelled differently than everybody thinks. So you can look us up online, but it's PELORUS, equitygroup.com. And that starts the process. And every deal is so different that there's just no set guidelines. Most of our transactions, for however much that we're lending, we have 40 to 50% coming from the borrower as well. So if we do a total transaction cost of 10 million and we provide 6 million of that, they brought 4 million of it as well. So the one element that I didn't say there is that not only do you have to have the sponsor and the experience from the operator, you also have that equity. You have to have that. You have to have that equity available to go as well. And so that's not always coming from the sponsor. That might be aggregated from other people. So that's those three elements are what you need.
Okay. And where did you come up with the name Pelorus? What does that mean?
Oh yeah. So when I name companies, I usually look for celestial bodies or mega yachts are good places to start. And so Abramoff's boat is Pelorus, and Pelorus is a navigational instrument used to navigate through places when you don't have a compass available. It's another methodology to get there. So I like the story, and it's a cool name.
Very cool. Very cool. All right. So, Rob, thanks for coming on the show, talking to us. This has been a fun conversation. I love talking about things that are emerging, that we really see a bright future for. So this sounds like a really interesting deal. For people listening into the audience, if this is a deal that would fit you, reach out to our guests, reach out to Rob, say thanks for being on the show, and find a way to do a deal together. Till then, talk to you all next episode. See you guys.
Take care.